Okay, welcome to Coffee with Marcus and Mark. In this show, we talk about what's happening in the markets and how we're trading them. Today is Tuesday, September 13th. Stocks traded higher for 4 days straight, but is the win streak coming to an end? We'll take a look at where markets are today. Plus, CPI data is out. We'll look at what we know about inflation, and it doesn't look too good. Also, is a 100 basis point rate hike possible? We'll see what traders are betting on now. And is deflation on the horizon? A big fund manager thinks so. And much, much more. Plus, I'll review our current positions and how we trade these markets. As you can see, there's a lot to talk about. So let's go ahead and get started. If this is your first time here, my name is Mark Hodge, and I'm head coach at Rockwell Trading. I'm flying solo today, but on most days, Markus, Rockwell's founder, is with me, and we show you how we trade these crazy markets. He's actually flying up to Toronto, where he's going to be speaking at the Money Show. So, Markus, have a safe flight and enjoy your travels. And I know that some viewers and followers are going to be able to see you speak there. Now, you could say that we have a ton of trading experience and we know our stuff. We're not afraid to tell it how it is. And if you're looking for some honest insight into the world of trading, you are in the right place. Before we dive in and show you our trades and how we're tackling these crazy markets, let's take a look at what is moving the markets today. And let me jump right to this charts here. Let's go on over to the S&P. There we go. There we go. I just want to clear this up a little bit, make it a little easier to see prices. And here we see this nice 4-day win streak coming to an end here. 4 consecutive days higher. Things were looking pretty good, but this morning, a big gap down. So that 4-day win streak, actually the longest win streak, the last time we had a 4-day win streak was 2 months ago, not since July 7th. It does look like, unless there's a miracle rally towards the end of the day, that this win streak is over, and we will be looking at a loss and that win streak coming to an end. The S&P gapping down after CPI data, continuing to trade lower throughout the session, down a whopping 3%. So big move lower today. The Dow down over 800 points, also bringing this win streak to an end. At least that's what it looks like this morning, down 2.6%. The NASDAQ leading the indices lower with the biggest loss, down 3.9%. So a big move lower across the board. And why? Well, it's all about inflation. Let's go ahead and go to PowerX Optimizer, bring up the economic calendar here. And we see that we had this red flagged, high important report. We talked about it last week. We talked about it this week. This is the report that traders were keeping a close eye on. And it was released this morning. And CPI, it shows this is green because it was higher, but this is not good news. CPI data, the consumer price index for August, came in higher than expected, up 0.1%. This was compared to a minus 0.1% decrease that was expected. So traders and investors, they were expecting that prices would be coming down a little bit, especially because of the big decrease in energy costs that we've seen. But that was not the case, actually ticking higher. So that was a big surprise. Core CPI, which is something that the Fed might take a closer look at because it excludes energy and food prices, which tend to be more volatile. This definitely jumping. The forecast was that it would come in a little bit higher, up 0.3%, but that was double what was expected, coming in at 0.6%. So on a year-over-year basis, core or the CPI number, 8.3% inflation. And if we look at core CPI on a year-over-year basis, inflation and the consumer price index year over year is at 6.3%. So this was a disappointment. Many traders expecting and hoping that we'd see peak inflation and numbers continuing to fall after prices have just run rampant. And that means that traders, they expect that the Fed is going to continue to be aggressive raising rates. And raising rates is not good for stocks because for two reasons. One, when you raise rates, you are slowing down economic growth because of higher borrowing costs, right? So you have that concern, but then you also have higher interest rates that you can actually make money off of, right? As putting money into interest bearing investments rather than into the stock market where returns are not guaranteed. You can have this outflow from stocks and equities into interest bearing investments where that rate of return is guaranteed. So that's not good for the market. And if we take a look at what the probabilities are now that we've made this or now that we have the CPI data this morning out of the way, and you see that these bars shifted, right? Yesterday, when we brought it up, the bar on the left was small, a low probability. The bar on the right was high, but this could be a little bit misleading because what's happened between yesterday and today, now, let me accept cookies. There we go. Now, this is not a 50 basis point hike, which it represented yesterday. This is actually a 75 basis point hike. So we see that the current target rate is 225 to 250. And here, traders say that there's an 82% chance based on Fed funds futures that the Fed will raise rates 75 basis points, bringing the target rate up to 300 to 325. That means that this isn't the 75 basis point rating. This is a 100 basis point rating at the 325, 350 level. So the markets have pretty much priced in the 75 basis point hike. That's pretty much a guarantee. But some investors are saying, you know what? With this news, with inflation and costs still rising, and with a rather strong economy, the Fed might choose to be more aggressive, actually jump in at 100 basis points to try and just get this inflation under control. You also have the longer term expectations of the Fed changing as well. Here we see that with the September meeting, which is going to be next week, that 75 basis point hike. But now traders and investors are counting on another 75 basis point hike in November. I want to say that was 50 basis points just yesterday, and then increasing a little bit higher for next year. In fact, at the beginning of today's session, we didn't have it going to the 425, 450 level. It was 400 to 425. Now some investors are saying, hey, with the way that inflation's going and the economy staying strong, they're betting on the Fed actually continuing to raise rates. And just a couple of weeks ago, it looked like we were more at the we were actually going to see rates decreasing in 2023 towards the end of 2023. And now projections or expectations from investors based on Fed funds futures are saying, you know what, the Fed has a lot more to do. And because of the economy, they can be aggressive, which again is not good for stocks. So right now, a lot of speculation, but this is why the markets are down today. Why the NASDAQ is down 4%, the S&P is down 3%, because of what the Fed might do with the higher CPI data. Now, we still have PPI data tomorrow. And of course, the Fed statement or the policy meeting hasn't even started, right? That's going to kick off next week. It's a 2-day meeting, starts on Tuesday, wraps up on Wednesday, and we will see what the Fed has to say. But in the meantime, traders have erased more than half of this 4-day rally. Looks like we're making our ways back towards the lows that we had in September. Not there yet, not down here near the lows that we had in June, but definitely a nasty day for the markets. Now, this actually is a good thing when you are trading the wheel, because with this higher volatility, with premiums in options jumping with the uncertainty, we could take advantage of that. We can sell premium, collect premium, and there were a lot of opportunities popping up on the wheel scanner today. I do want to bring up the VIX though, because the VIX, also known as the fear index, tracks volatility priced into these options for S&P 500 options. And we see here that with the news, there was this big spike. Yesterday, we saw a little bit of an outlier with how the VIX was moving in relation to equities. Yesterday, the markets were higher. across the board, and the VIX was also moving higher, which is not typical. Typically, when you have the markets higher, the VIX is falling. There's less fear in the market. So traders were pricing in a little extra volatility yesterday. Not quite sure what this CPI number was going to bring, but today definitely jumping up almost 9% here. Now, we've mentioned that over time, over the last 10 years, 17.5 is about the norm for the VIX. We've seen elevated volatility this year. Spikes above 30 are more extreme. So we're not quite there yet, but definitely some volatility in these markets and a lot going on. Now, I do want to mention, not to throw anybody under the bus, but I do want to mention this fund manager that expects deflation to be coming into the market. The quote, I don't want to give it away yet, but here's the quote. Actually, it was a tweet. I would not be surprised to see a significant policy pivot in the next 3 to 6 months. The Fed seems to respond to COVID-related supply shocks spanning 15 months, the same way that Volcker battled inflation that had been brewing and building for 15 years. Powell is using Volcker's sledgehammer, and I believe making a mistake. Who do you think this might be? Well, it was Cathie Wood, and she's lost a little bit of her edge. We could look at her innovation ETF, and this is what her ETF has done this year, falling from 120 down to about 42, down another 7% today. Hey, she might be a sharp gal, but she's definitely got it wrong over the last year or so, and I'm not so sure I agree with her on that statement. But she expects deflation to be taking place. Definitely not with the CPI number today, and definitely not a significant change anytime soon, at least with the way that traders are betting on Fed funds future. So let's take a look at, well, let's go to PowerX Optimizer here, because this is where I want to share a couple of things in the scanner that could help find opportunities. When you have big moves in the market, the scanner is just working on overdrive, spitting out so many results here. And these are stocks that have nice premium based on what we could collect and the expiration and the ROI that we're able to generate by selling options. So when the markets are down, although some traders are fearful, that fear can translate into profits when you are picking good stocks, quality stocks, and you're selling options with strike prices at prices that you want to own the stock. The nice thing about selling puts rather than buying in a falling market is when you sell puts, what we like to do is we like to sell puts below the market. So the stock could actually fall further. And then if we do see the stock drop below our strike that we've sold, we're essentially able to buy that stock at a discount from where it was trading today. So in my book, that's a win if you're picking a good stock and you're picking good strikes. Not only are you able to buy shares at a discount from where they were trading today, you are also basically getting paid a dividend up front, right? Because when you sell a put, you're collecting premium. That option buyer is paying you for that put. And this is where this can be very lucrative, right? When investors are fearful, there's usually opportunities in the market, and the scanner helps us find those opportunities. Now, I'm just going to go to the filters here, because we have some default filters. We can choose whether or not we want stocks to be paying dividends, whether that's yes or no or all. And when we are choosing a filter where the dividend is yes, that means that that company is basically paying shareholders. That company is taking some profits and returning it back to the shareholders. That's going to help filter out growth stocks. Growth stocks do not pay dividends, because growth stocks, they put all of that, any revenue, everything possible into growing the company and future earnings, hopefully, right? Now, We could just go to the default settings here with a market cap of 5 billion. So this is going to eliminate some smaller companies. Also, PE ratio, the price to earnings ratio. We like to have this capped at 50 as our default setting. We could expand it if we want to see more stocks available. The expiration, we like to go out 1 or 2 weeks to expiration to find nice premium. Now, I really like to go with the most recent expiration, especially when we have a lot of time left like this week. So it's Tuesday morning. I like to look at Friday's expiration on Tuesdays, especially with the moves we had today and the data that's still coming out. We have PPI data tomorrow, and next week we have the Fed. So I don't think we need to go to next Friday's expiration right now. And here I'll be looking at September 16th expirations. And here we have a minimum strike of $15. This means that I really want to look at stocks that would be really at a minimum $15 or higher for the wheel. And the premium collection, what I want to get is based on that premium and the expiration and the days to expiration. I like to generate 30% ROI or better for the puts that I'm looking to sell. And we had a pretty decent list. There's more being added as we go through it now. Here were a few that I was looking at. ADI as a maybe, Qualcomm as a maybe, Suncor as a maybe. ADI, this one, if I wasn't in AMD, that I would have been a little more interested in this, but it's a nice looking chart, and it's for the year, it's actually been performing very well, moving sideways and ranging rather than just falling like the overall market. Um, I do want to mention a trade that I put on today. And this is one that Marcus is already in. So if you've been following along, Marcus, uh, last week, I believe it was, or the previous week, we sold the 101, 108 strike, excuse me. And it just so happened that at expiration, some people who sold the 108 were assigned shares and others were not. Marcus was assigned shares. I was not. Marcus has been able to collect some real nice premium selling calls. I've missed out on that. Last week, I was able to sell the 101 put and collect a little premium there. So even though I didn't get assigned, I was able to collect some money there with the 101 put that I sold. And today I decided to sell the 103.50. So here we see possible support around 105, 105.50 maybe, based on the indicator that we have here in PowerX Optimizer. I decided to go a little bit below at 103.50. That was a trade that I put on today. So Marcus and I were both trading Google. We just right now have slightly different approaches based on his assignment last week and me not getting assigned. So that's a new one for today. Right now, it looks like Google is making some lower lows for the day, trading around a 105.30. But I'm happy with the 103.50 strike because even if support holds, great. I'm able to collect that premium. I might be able to buy that put back, or it expires worthless, and I get paid for selling that put to someone else. If I do get assigned at 103.50, I'm happy to own it here because I believe that there's a potential if we make a attempt to get through support that we will see buying interest on a quality company at these levels. So I'm happy to own it at 103.50. And Marcus, even though it's down a little bit, he's been able to collect some nice premium. So that's the whole goal with the wheel, to be getting paid when you don't own shares and basically collecting a dividend up front. And then once you own shares, to be getting paid by selling calls. And that's what he's been doing. So slightly different approach based on what's been going on. But I'm liking Google. I think it was one of my favorites for the day, even though it's down some based on the CPI news that we had. So looking ahead at the economic calendar, today was the real biggie for the week. But PPI data, the producer price index, is being released tomorrow at 8:30. That's something that, again, with producer prices, we'll get to see if they're increasing or decreasing because of the big reaction that we had today. This is a wild card. It could move the market. Which direction? Well, that's anybody's guess, but something to be aware of pre-market tomorrow. It is quadruple witching on Friday. We'll talk more about that in an upcoming video. We also have some consumer sentiment data being released, but PPI tomorrow, retail sales on Thursday, and a busy week leading up to next week's Fed week. So that's going to do it for today's video. I hope you were able to find some opportunities. I hope that even though the markets are falling, that's a good thing for you with the strategies that you're trading. In our case, we like to sell premium, especially when we have an opportunity like this, and it was a good day for that. So that's going to do it for today's video. Until tomorrow, happy trading, everybody.